What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. We do release bonus content from time to time, so you want to make sure you're notified when that happens. Make sure you follow us on X at Bullish Chips. We do tweet real-time entries and exits for our scalps and day trades, as well as mid and long-term trades as well. And we also tweet about other things that might help you trade throughout the day. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day, but in the past, as well as where we believe price action will take us in the future based off of our trading method and charting method. On today's agenda, we will recap today's price action, intraday price action, and then we'll take a wide view of SOXL's price action from the week, month, quarter, and year perspective. Then we'll get into the market maker's expected move for tomorrow, and then we'll set our triggers and targets for the day and just review the triggers and targets for the week, month, quarter, and year. So digging into the charts here, looking at intraday time, 5-minute time frame. We can see that we opened up here at 24.41. This peach dash line, as you can see, labeled with OP, is opening print. So we did get an initial push down, but you can see that we found support off of the previous lower day, the week flip, which would have flipped the week red, as well as this hourly broadening formation. So all of those converging together gave us some pretty good support. Not to mention the market maker's expected low is down here at this 23.83. So we did see the low put in, and then went up, put in a lower high on the 5-minute from based off of like yesterday's price action. So this was a lower high. So we did enter some puts because it was below opening print, having a stop at the high of this candle. And that promptly got reversed by a higher low, and we stopped out for a slight loss. But when we saw we were going to probably get stopped out when this candle closed as a failed 2 down, we went ahead and entered calls when we went 2 up here, locking in the higher low here. We were a little bit earlier than we normally like to get in. We usually like to get in with price action higher lows above opening print, but we were recognizing the situation, the level that we were at. This purple small dash purple line is a weekly uptrend line. If you're not familiar with our color coding system, make sure you check out our bonus content and the precision trading video and charting basics video. It talks about the different colors that we use so that we can easily identify different levels. But that coinciding with the quarter flip and opening print, we knew we could get a springboard off of this area. So we did enter some calls here, and then we got the push up above opening print. Then to follow our rules, we waited for the higher low above the opening print, and we added to our calls. We did, if you follow us on X, you would have seen these live. We had exited half of our first batch of calls at the overnight high and the second half at the previous high a day to lock in some profit. We had a gap up here between previous high a day and this 25.67, which is last week's low. So we were looking for the gap close, holding on to those second round of calls. And we did actually we got the gap close. We sold the remainder of our calls here, but we did grab a cheap, I think it was just one for tomorrow. Just looking out at AVGO's earnings, decided to kind of roll the dice with that. More of a risky place, not part of our plan usually, so we didn't put that out on X, but just a disclaimer, we did put that out there. So we did get the gap close. We did peek into last week's price action, but we mentioned in last night's video and previous videos, right, we've got last week's low, last quarter's high, and last month's 50% line here that are probably going to act as a little bit of resistance. So if we were going to get over this, we would have needed to push through it today and get some type of higher low. Now AVGO's earnings could push us up overnight and just gap us up over that, and we could get a higher low above that and just continue to push higher. So that may be the way that we defeat this what is like kind of a resistance zone right now. But you can see intraday, all of our levels were adhered to, and you can see once we got, if you didn't want to take the riskier play, buying the call below opening print, you just wait for that higher low here above opening print. You can buy calls, and you can see how we get the initial touch to the overnight high, a little bit of retracement back to this 4-hour trigger to the upside. Once we got the higher low with the confirmation, above this trigger 4-hour trigger to the upside, that gave us the momentum to go through the overnight high and go test that previous high a day. And once again, we had a little bit of reactionary movement here at high a day, just going sideways, and then got our continued push up, and then our final stop at last week's low. So, there is a reason why we have these levels on here, our 4-hour markers, as we call them, being the overnight high, previous high a day, opening print, overnight low, and previous low a day. And then again, our major levels that we keep track of, like the week and quarter flip, week and month flip, the quarter flip, and then above, we have our levels of last quarter's high, last month's 50%, last week's low. Those are points of inflection from an intraday perspective. So they may not hold that much, from a swing perspective, but from an intraday perspective, we want to make sure we know those levels. Also, we have these broadening formation, the 1-hour broadening formation. You can see along with the horizontal levels, it kind of just rode the broadening formation up as well. So broadening formations do come into play. If you're not familiar with broadening formations, that is a part of our charting and trading method, which comes as a part of the STRAT. If you're not familiar with the STRAT, I've got a link to a free document in the description to this video. You can go download this document. It's a very easy way to learn price action. There's only 3 things a candle can do: be a 1, a 2, or a 3. Then there's like 6 major reversals based off of those different patterns from those candles. So the reason why we like to trade reversals is because it gives us a very clear entry and a very clear exit. That way, going into the trade how much you stand to make, how much you can risk. There are very clear entries on continuation patterns as well, but then it's up to your judgment on price action, both in the past and current, to determine where you want to exit on continuation patterns. So there's nothing wrong with trading continuation patterns. I know a lot of people that will trade 222s, but me personally, I like to trade reversals because they give you a very clear entry, very clear exit. You can calculate what you stand to make and lose from before you even get in the trade. So if you're not familiar with the strat, after this video, check out this document. I also have a link to Rob Smith's YouTube page. He's the inventor of the strat. There's a wealth of knowledge on his YouTube page as well. There's also a very big strat community out there. So there's plenty of information on the internet about Rob, about the strat strategy, I guess you can call it. And so that if you want to know more about it, look into it. If you'll probably get a good hang of it if you just hang with us through the rest of this video. But that is where we're coming up with these numbered candles and reversals and things of that nature. So that's I guess enough about the intraday look. Let's go ahead and look at just the day time frame. And we can see, again, we've been in this range for about 10 weeks of 24 to 28 basically. We did have the peaks above and below those levels for the look above and fail and the look below and fail in previous weeks, but for the most part we've kept within the 24 to 28 range. So we've been buying calls at the bottom, riding them up to the top, buying puts at the top, riding them down to the bottom, and then intraday just picking and choosing what we're going to go into calls or puts based off of that day's price action. So kind of playing it both on the short term and swing perspective while things go sideways. Just one way to attack things. There's plenty of other strategies that people use out there to trade ranging price action, but that's the way that we're playing it. We've also included selling calls from the top of the range as well, which have worked out very well. So just a way that you can kind of look at it if you're not a big intraday trader, if you're not able to look at the charts throughout the day, and you want something more, I don't want to say long term, but something you can buy one day and wait a day or more to before you actually exit, with some good safety built into it. That's the way you can kind of look at the market that we're in right now. So today was a green 3, as we call it in the STRAT community, or a bullish engulfing candle. So we did get price action below yesterday's price action, but it was not accepted, and we pushed back above yesterday's price action. So, very bullish sign. Again, we've got this purple dashed line here, which is a weekly uptrend line that looks like we're getting some support on when you combine it with the horizontal levels that we have. Again, we don't like to put too much weight into trend lines, but when they do coincide with major horizontal lines, then they do hold a little bit more weight in our book. As you can see, we did stop today around last quarter's high, which again, if you look at the range, that combined with last month's 50%, it's about 50% through the range. So you can expect resistance around this area. Again, with AVGO's earnings, maybe we get the gap up and we get a gap and go, maybe try and go attack this gap. I don't know if we would get that tomorrow. That'd be a pretty big move, but it's always on the table. Today was a pretty big day as well, so we could get that if things really get going tomorrow. So from the day perspective, we're still looking strong, bouncing off the bottom of the support. We are putting in, this was a soft higher low, so depending on how much weight you want to put into that, it was not, I wouldn't call it a big violation of going below this level. Based off of this low that we have at the bottom of the range, we are making a higher low with this candle as well as this candle. So we are getting the higher low already within, even though it is again a soft higher low because it occurred within one candle. So things are looking bullish for right now, at least to get back to the top of the range. But again, we're not going to predict anything. We're just going to do our homework and just be ready for whichever way price action wants to go tomorrow. Looking at things from the week perspective, oops, that's not the one I want. From the week perspective, we're looking pretty good, right? This would be a higher low after a lower high, which would signal more consolidation than a downtrend or a bearish signal, right? The lower high that we have here, it can kind of start a downtrend, but we've got to get a lower low to really lock in a downtrend. So far we don't have that. That would indicate more of consolidation. Again, we've got this gap up here towards the top of the range that we've been in for the past 10 weeks, giving us, kind of acting as kind of a magnet, bouncing off the month and quarter support, so as well as last year's low, which is this white dashed line. So we've got some good support. Looks like we're making a flag here. So, when you look at a bull flag or bear flag, either way, you usually measure the move of the flag. So from about, we'll say 16 to 23, 24, right? That's $7-8. Stack that on top of the flag. So the flag, we'll just call it 28 even. So $7-8 would be, would be $36-37. So up here, trying to get to this gap up here, obviously would be breaking through this weekly broadening formation, making a higher high from the week perspective, but making this second higher high may be what stalls us out, and gives us some type of pullback. So we'll see if we make that move. We also want to keep in mind seasonality. September, October are the worst performing months for tech. So really actually for just the market overall. So we want to keep in mind that, even if we do get some consolidation pattern here, if we continue to make lower highs, we do run the risk of, coming down, filling this gap, possibly falling back down below this monthly downtrend line that we've been working real hard to defeat. So we want to keep our eyes open to the fact that there's still a great possibility we can go down. If we're talking about time frame continuity, the month and quarter flip are right here. So we're already red on the year. If the quarter and month flip red, that's a lot more momentum for the bears as well. So then we're in full time frame continuity to the downside, and you're looking at selling more calls and buying more puts from a swing perspective, right? And possibly going to breach the bottom of this 3 here. So we want to keep our eyes open to the downside. On the positive note, just as we can easily flip full time frame continuity to the downside, we're already green on the month and the quarter, so we're very close to the year. If we can flip that the year green at 28.13, then we're full time frame continuity to the upside, and we've got more momentum behind the bulls. So again, been saying the same thing, feeling like a broken record, but it's been 10 weeks, so I don't want to steer you wrong. I don't want to start telling you to buy long in either direction. If especially if I'm not doing it for myself, although I'm not giving you, telling you what to do with your money. It is your choice in the end. It is, I'm just making suggestions out here based off of what I see on price action. So I don't see buying anything long term right now. Right? If you're already in 26 and 27 contracts, kind of sit tight. We're still moving sideways. Wait till we actually make our break to the downside or upside to determine whether you want to sell or continue to stay in or even add to the position. So that's what we're looking like from the day and the week, the month. We'll just go through this real quick. The month, we're still inside on the month after a big engulfing candle last month, right? So, whoa, there we go. Good thing is we're inside, but we're green, we're positive, we're trying to get above that 50% mark of this three. Once we do that, the bigger chance that we have of breaching the top of the three. So I want to keep that in mind. Not too bullish, but we're leaning bullish. We're neutral, leaning bullish from the month perspective. From the quarter perspective, we're getting that much closer to being back in force on the 2 down, 2 up. Remember, if we get the 2 down, 2 up already triggered. So what that means is we're targeting the high of the candle to the left of the 2 down. So the high of this candle right here is that 36.15. That could be the top of the flagpole on a second push up when we were talking about the bull flag continuation there. But for right now, we pulled back within last month's price action, so it's no longer in force. The 2 down, 2 up. We want to get back above last month's high, last quarter's high, and put that back in force so we can try and target the high of this candle once again. From a year perspective, again, this is the only thing that's kind of keeping us, quote unquote, down. The year is red. We triggered the 1, 2 up, 2 down. It almost reached magnitude, right? The magnitude of the 1, 2 up, 2 down is the low of the candle to the left of the 1. So this is the 1. The candle to the left of the 1 is this here. The low here is 621. In April, when we had that dip, we made the 723 low. So it didn't quite reach magnitude. So, if things really get bad and all of a sudden we could push back down and try and reach the magnitude of that. Because again, we would have flipped the month and the quarter red at that point, giving full time frame continuity to the downside, and we've got plenty of gaps to the downside to kind of act as magnets again if things get bad enough. But in no way are we predicting that right now. We're looking hopefully by the end of the year to flip this back green, get green on the year, at least kind of hammer up here, giving us a more bullish signal, looking for a 2 down, 2 up, which would then target the high of the candle to the left of the 2 down, which is that all-time high of 70, or not all-time high, but next to all-time high of 70.08. So, from a year perspective, we still got a long ways to go. We're just moving sideways on the week, as we can see from the day. Again, 10 weeks in the sideways direction. So I think that's good enough cover from a high time frame perspective. Let's just look at our agenda. I think we need to go ahead and look at our market makers expected move. Yeah, let's look at the market makers expected move for the tomorrow. Actually, before we do that, that's fine. Let's look at the market makers expected move here. If you pull up your, at least I'm using Thinkorswim. If you pull up your options chain for this week, we can see here that the market makers expected move is plus or minus $1.24. So if we go back to our notes here, these are our notes for tomorrow, September 5th. There will be 79 trading days left in the year tomorrow. Today's close price was $25.65. We know it flips the week, the month, and the quarter red, and then we know it flips the year green. We have our market makers expected move for the week here, and we've got the market makers expected move for the tomorrow here, right? So that's that $1.24 plus or minus. So if you add the $1.24 to the close price of $25.65, that gives us the $26.89. You subtract the $1.24 from the close price of $25.65, that gives us a $24.41. So if we go back to our charts here, I believe I put it on tomorrow. Yeah, so if we look at this from an intraday perspective, it's something that we want to keep track of, right? It's not so much something you were going to keep track of from a swing trade perspective, right? Because it's just the move for tomorrow that's that we're mapping out here. But you can see on the chart we've got our market makers expected move low here at 24.41, and up here at 26.89 we've got the market makers expected high here. So we do have that charted out. It doesn't mean that price action will stay within those levels. Those are not an end-all be-all. Just it's about 70-80% of the time price action stays within those levels. So there is still a percentage of time that price action goes above those levels or below those levels. That happened last Friday. So it would not be anything strange if that would happen, but it's a level that you want to keep in mind, as it could be a possible top or bottom depending on which way price action goes tomorrow. So that's the market maker's expected move. That's how we have it charted out. With that, we'll go ahead and look at the triggers and targets for tomorrow. And oops, that's not what we want. We want the 4 hour. So from the 4 hour perspective, we want to look at our triggers and targets first. We already know what our intraday triggers and targets are, right? So let's just switch back or go back to the 5 minute real quick. So we know where, let's squeeze this down a little bit. All right, so we know where we closed today. So the previous high day is marked here. So far, the overnight high has been here at 25.90. I'm sure that'll move before the end of the night, maybe possibly not, but we'll see tomorrow morning when we get right before price opens. So far, the overnight low has been 25.40. We've got our 4 hour trigger to the downside here. The 4 hour trigger to the upside is also the previous high day. We got last month's 50%, and then we've got the market maker's expected move down here, right? Past that, we've got the quarter flip, the week and month flip, and then the previous low a day. Market maker's expected move for the week low as well. And to the upside, again, the market maker's expected move to the upside. We've got last week's 50%. And then we've got the gap, and then the year flip. So those are our major levels that we want to be concerned about from an intraday perspective. Again, we work off of opening print, right? Let's say we get an opening print right here. This is our opening print level, right? If we break below and start to get lower high, and we get a lower high underneath the opening print, and we continue to push down, that's our signal that we want to buy puts. The first target would be the overnight low. Again, you probably wouldn't sell there. That's not a lot of action, even if you bought it straight off of the opening print. The next target to the downside would be the 4 hour trigger to the downside. Not as much weight with that target because it's more of a trigger as well. So once you get past that, our next target would be the market maker's expected move, the low for that move, which it coincides with the quarter flip. And past that, we would have the previous low a day as the next target, which coincides with the week and month flip. So those would be our targets to the downside. Again, just looking for lower highs underneath the opening print. Whenever we get lower highs underneath the opening print, whether it's on the 5 minute, 15 minute, 1 hour, whatever it is, that's when we're looking to get puts to the downside. On the opposite side, if we break above opening print and we start to get higher lows, again, your first target is going to be previous high a day. Not that much magnitude in it, so you would want to try and see it through to the overnight high would be your next target. That does coincide with the last year's high. So that's a good level that could be reversed at it as well. We could just go sideways tomorrow. Your next target would be the 50% of last year, and then your market maker's expected high. I've got these fibs out here. You'll see why in a minute, but we would have the last month's 50% and the market maker's expected move high as your next target. So that's how you would attack it from an intraday perspective. Once we start talking about the 4 hour triggers, the reason why I do definitely want to bring up the 4 hours is because we do have set up here a 3-2 up. And one of my favorite reversals to trade is a 3-2 up, 2 down, or a 3-2 down, 2 up. Now, usually I would like to see a failed 2 up if I'm looking for a 3-2 up, 2 down, but it's not unheard of to see a green 2 up and then get a 2 down out of the next candle. So with that, we have a very clear reversal pattern, 3-2 up, 2 down. If the next candle is a 2 down, triggering at the low of the second 4 hour candle of today, which is 25.19, and a very clear target of the low of the 3, which is previous low a day at 23.98. So if we go back to our notes, we can see on the 4 hour, we have a possible 3-2 up, 2 down, triggering at 25.19 with the magnitude of 23.98, an extended target of 23.50. We're just throwing that on there, that 23.50. If you remember this white dashed line, that is last year's low. So it has been somewhat of a support point in the past. You can see we wick to it here, support here, support here, support here, support here. So it could be a very good point of reversal. I'm not going to get too level happy with the extended targets for the 4-hour because those 4-hour triggers and targets roll into the day. Just of note, we have these lower lows here, which would indicate a widening of a broadening formation on the 4-hour perspective. So we just like to keep note of those. To the upside, we would not have a reversal. We would have a continuation pattern. So we would have a 2 up, 2 up, triggering at 25.73, which is today's high. So here we would have the 2 up and then with another 2 up. So we don't have a magnitude. We have a very clear entry, but not necessarily a clear exit. But what we do have is targets of 26.11, 26.46, and 26.89. So we have 26.11, which is last month's 50%, 26.46, which is the 50 fib of the high, the latest high to low in the range that we've been in for 10 weeks. So the high from last Thursday to the low of Tuesday. We've drawn the Fibonacci's with the 32, 50, and 61.8. So that would give us the 26.46, and the 26.89 is the market maker's expected move high, right? So again, the 4-hour triggers and targets are there, but they roll into the day triggers and targets. So on the day, if we were to get this 3, 2 up, 2 down, and reach this 23.98 and go below 23.98, that magnitude of the 4-hour is the trigger of the 1 day. So that 23.98 is the trigger with the target of 23.50, which again is last year's low. Then 22.95 and 22.57, which are the lower lows on the day chart as well. So if we flip this to the day, and let's get us a better chart. Oops, we need on with the week on it. There we go. We've got the 3, 2 down, right? Targeting the 23.50. Then we have the 22.95 here, which is the lower low here on the day. And then we've got the 22.57 here, which is also the top of the gap that we've got on the day perspective. That also coincides with last month's low. So could be a bounce point. We've seen the bounces off of the tops and the bottoms of the gap before if you're familiar with this channel. So we know that although gaps like to get filled, they are bounce points as well. So from a day perspective, we can kind of keep that as another target. Of course, the close of the gap would be the final extended target from the day perspective. That would trigger something from the week perspective as well, because we would be back in force on the 2 down, making a lower low on the week as well. So let's go ahead and roll into our week triggers and targets. All right, here is the week, and we can see that again we made the lower high, have not made a lower low here, but we are in force on the 2 up, 2 down. Now the 2 down is a failed 2 down because it is green, it's not red, and we have not made the lower low, so we're technically not in a downtrend, we're just consolidating. But if we were to reach the extended target of 23.80 on the day chart, right, that would trigger, that's the low of this week so far. And then if we get below this 23.50, that's a lower low on the day perspective, right? Let me just zoom in a little bit so it's a little bit more clear. That's a lower low on the week perspective. So that actually locks in the beginning of a downtrend. And then we've got the lower low here, which is the top of the gap. And then we've got the this 3. And if you're familiar with the STRAT, one of the kind of not necessarily anomalies, but patterns that's found is that once the 3 has been breached to one side, if price action comes back within 50% and breaches 50% of that 3, then there's a high chance that price action will go breach the other side of that 3. You can see we bounced off of about the 50% line previously. So if we get below and close this gap, we're obviously below the 50% of this 3, and we can look to target the low of this 3. So from the week perspective, we are 2 up, 2 down in force because we are below this 25.67. We're at 25.65. So it did trigger. The magnitude is 23.66. We have not reached it yet. So that would be where we would be looking to if we go to the downside tomorrow. And then we have the extended targets here of the 22.57, 21.98, and 21.18. If we were to go to the upside tomorrow and reach all of these extended targets on the day at 29.11, it would produce a green 3 on the week, and at that point we would be looking at 29.66 to reach for the target, which would be the highest high in the range so far. So again, just sideways movement, consolidation. It looks like at this point, bullish consolidation. Leaning bullish. But again, we're coming into the seasonality and things like that. So we've got to keep in mind, the quarter and the month flip are not far away either. We're very close to being in full time frame continuity to the downside. So we do have to keep the downside very much at the forefront of our mind while we continue to grind to the upside, right? Because that's technically what we're doing. But yeah, that's what we've got for the breakdown. Here's your triggers and targets again from the month and quarter and year perspective. We won't go through the actual charts of them. But we have not triggered the 2 down on the month or the 2 up on the month. We're still a 1 inside. So we do have our trigger at 22.57 for the downside and 29.66 for the upside. We did trigger the 2 down, 2 up on the quarter like we talked about before, but we're no longer in force. That's why this is bold and underlined, because it's in force. This is just underlined because we've triggered it, but we're no longer in force. So we've got to get back above that 25.84 to be back in force, and we're targeting that 36.15 from the quarter perspective. On the year, this is what's kind of keeping us sideways, right? We triggered the 1, 2 up, 2 down at 23.50 earlier in the year. We have not quite reached the 621 magnitude, so it's still got to be on the board, right? But yeah, that's our breakdown. I wanted to keep it, try and keep these videos kind of short while still packing in as much information as possible. The triggers and targets are pretty simple, especially if you're a student of the STRAT. But if you're just a student of price action, you can see how those triggers and targets can be totally valid, right? So just keeping all that in mind. If you want to do more research on the STRAT, again, I've got a link in the description to the PDF that I showed earlier, as well as the link to Rob Smith's YouTube page. Also, make sure to check out our bonus content for our precision trading video and our charting basics video, so you have a good understanding of what all these levels mean. On our intraday charts, we've got quite a few levels, right? But when we're looking at a longer term perspective, the day, the week, we don't have a lot of indicators out here, right? We've got a monthly downtrend line, the year flip, last year's low, the couple of major levels out here. But other than that, we put this flag fib extension out here so that you can see where we could reach to if we, do extend that flag out, right? At the very least 34.99, but you would be looking up closer to this 40 to close that gap for the 132 fib. If we take this away, this is our charts, right? Not a whole lot on here, but we're still totally understanding price action, right? Let's bring up the week so you can see a little bit more. We've got our monthly broadening formation, our quarterly broadening formation, monthly and quarterly. We've got our gaps listed out, and last year, the 50% for last year, but not a whole lot of markers, not MACDs and EMAs and all of that stuff to cloud up and give you self-analysis paralysis. We just look at the price action, use the numbering system, the 1s, 2s, and 3s of the STRAT, and it's very easy to understand where we have a high probability of going. So I hope everybody has enjoyed this video. Again, here's one more look at the triggers and targets. If you need more time, just go ahead and rewind back and watch this part again. But I hope everybody's enjoyed this video. If you have enjoyed it, give it a thumbs up, please. It helps the channel grow. Again, we're not selling anything on this channel. We're just trying to provide as much information as possible for consistent and consistent profits and good profits too, right? We're not just nickeling and diming over here. SOXL gives you a very good price entry for the high delta to low theta that you get on a high beta underlying ETF. So that's a good recipe for high profits without taking high risks, right? And that's what we want to spread the word about. SOXL is not a new ETF by any means. It's been out there for years, and the STRAT is not new by any means. It's been out there for years. It's proven. It's repeatable. There's a big community of stratters, as they call them, out there. So I encourage you all to give it a look if you're not familiar with it. But that is how we've down the price action from today for tomorrow and in the future. I hope you like this video. Again, give it a thumbs up if you did. Get some good rest tonight. Wake up refreshed tomorrow. And I hope everybody has a good day of trading tomorrow.